Welcome back to The Explainer. Today, we're unpacking a global economy on the brink, wild market swings, and the absolute disruption of AI. Let's get right into it.
We've got three main areas to cover today: global macroeconomic warnings, shifting financial markets, and finally, AI and tech disruption. So let's kick things off with Section 1, Global Macroeconomic Warnings.
The World Bank just dropped a massive warning. They're literally saying the global economy is a few months away from a worst-case scenario. This isn't just a tiny dip, guys. It's a huge test of our global resilience. And the IMF is totally echoing this. They're warning that war shocks and crazy energy crises are severely testing government budgets right now. All that emergency cash? Yeah, it's basically draining fast.
Just to put this into perspective, the Pentagon recently reported the cost of the Iran conflict alone has already hit $37.5 billion. That is a massive financial hit in virtually no time at all. The IMF is raising some serious red flags here. Sure, the oil market absorbed the initial shocks, but our safety buffers are running incredibly low. With debt piling up, countries desperately need strict fiscal discipline to put their houses in order before the next crisis. So, with all these pressures mounting and the runway for deficit spending essentially gone, you've got to wonder, where exactly are investors turning to hide out? Which brings us to Section 2, Shifting Financial Markets. Interestingly, instead of total panic, investors are treating this economic dip as a major opportunity. We're actually seeing this crazy dual reaction driving rallies in both traditional safe havens and super high-risk assets all at once. On the safe side, gold is surging to a two-week high. One major bank is actually keeping their bullish stance and calling a bold $5,000 price target for it. That's a huge bet on historical safety. But right on the flip side, risk appetite is wild. Bitcoin is rallying super hard, totally ignoring the macro gloom and knocking right on the door of $70,000. It's a complete split personality in the markets. We've got gold surging as a traditional safe haven versus Bitcoin nearing 70K fueled by absolute risk on excitement. Investors are basically building bunkers but buying rocket ships at the exact same time. All right, moving on to the force cutting through all of this. Section 3, AI and tech disruption. In the race for tech dominance, Google just dropped their new Gemini models. The big focus? Massive speed upgrades and drastically lowering costs to finally make widespread enterprise adoption a reality. But it's not all smooth sailing. The promise of AI is huge. The IMF says it could boost Europe's growth by 3%. The reality, though? A massive energy drain on our power grids and a growing mountain of copyright lawsuits slowing things down. Speaking of the legal front, we just saw a historic settlement where the AI company Anthropic agreed to pay $1.5 million. That breaks down to about $3,000 per work just to settle copyright infringement claims with writers. To actually manage the AI era and capture that growth, the IMF says governments need to deepen single markets for tech, carefully calibrate new regulations, seriously expand electricity power grids, and crucially, protect against AI-fueled cyber attacks. And global regulation is already tightening fast. France just straight up banned social media for kids under 15, and the US is issuing strict warnings to China over AI intellectual property theft. Governments are clearly scrambling to keep pace. So, looking at this whole puzzle, here's the real question. How do you balance such extreme economic caution with this unparalleled tech-driven optimism? Navigating these macro storms and tech disruptions is absolutely crucial for your future. Thanks for tuning into this explainer and follow for daily AI and tech updates.